Welcome back, investors. Ticker Time News. I'm Adam, and Palantir is facing a sharp sell-off after the software-based data analytical company posted its second straight earnings miss for Q1. And piling on to Palantir's miss is a string of other weak points, which become especially pronounced when viewed against the backdrop of the stock's pricing multiple of about 50 times forward earnings. Factoring in Monday's pullback, Palantir has slid roughly 60% in 2022, dipping significantly below its direct offering of $10 per share in September of 2020. The strong selling pressure is coming from two fronts: its Q1 earnings miss and the company's secrecy, which has not helped reassure investors of the company's long-term growth potential. Palantir's CEO even said on the earnings call that Palantir is playing a much bigger role than it's allowed to mention or would ever discuss in public, and that the company would love to someday discuss precisely what it's doing. Now, in Q1, adjusted EPS fell 50% year over year to 2 cents a share. However, revenue did jump by 30.8% year over year to $446.3 million, driven by solid commercial revenue growth of 54%. Even better was U.S. commercial revenue, which more than doubled at 136% year over year. However, even though Q1 sales growth exceeded Palantir's expectations, investors are focusing on the ongoing slowdown in government revenues, which grew at just 16% year over year in Q1. In Q4 of 21, government revenue growth was 26%, which was already a sizable drop-off from the 34% growth in Q3 21 and the 66% growth in Q2 21. As 58% of fiscal year 21 sales came from governments, this deceleration is a notable problem. On the bright side, though, Palantir expects U.S. government revenue, which makes up the majority of total government revenue, to accelerate into the second half of 2022, primarily due to the passage of a new budget. For example, in Q2 to date, Palantir is already seeing a re-acceleration of U.S. government revenues, and it expects the overall government segment to catch up in Q3 or shortly thereafter. Further good news is that Palantir reiterated its 30+% annual growth rate target through 2025. Although investors were not overly thrilled by this goal when Palantir first announced it in February of 2021, it's encouraging that the company is still maintaining this outlook, especially since it's guiding for just 25% growth year over year in Q2, which fell short of analyst expectations. Still, these few bright spots are being massively overshadowed by Palantir's lofty valuation of around 50 times forward earnings, its decelerating government growth revenue, and the fact that much of the company's work remains somewhat a mystery. Last quarter, I continued to urge caution trading on Palantir due to its high multiple and to a concerning trend of weakening results. I continue to hold this view as of now. However, Palantir is one company to keep on your radar, as accelerated digitalization trends are likely to drive an accumulation of data that could contain insights into improving companies' productivity, which could make Palantir a great long-term investment once the stock and the overall market begin to stabilize. On a final note, even though their business models differ slightly, other data analytical organizations such as Snowflake, ticker symbol SNOW, which trades at 24 times forward sales, and C3.ai, ticker symbol AI, which trades at 6 times forward sales, could face a similar fate when they report earnings later this quarter. So, what did you think about Palantir's earnings report and the stock diving over 20%? Are you bottom fishing on Palantir yet? Let me know in the comments below, as your comments help us all to better understand. Help us out by smashing that like button, sharing this video wherever you can, and join us in beating this crazy market by clicking the first link in the description. You'll love it there, and I would love to see you there. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.